Ever wonder if you've been missing out on money just because you don't keep every receipt? So today we're going through legal tax deductions you can claim even if you don't have proof. Let's see if you've been leaving money on the table. So let's get into it. So of course I found an article. So I'm going to be reacting in real time because taxes, they aren't my forte. And I know this video is a little bit behind, but nevertheless, we're going to get into it. All right, so this is 9 helpful tax deductions you can legally claim without having receipts. All right, so now that the 2024 tax filing season is finally here, you might be kicking yourself for throwing out some of your receipts from the past year, especially if you were counting on tax write-offs to turn 2025 into the year you make money moves to improve your financial situation. I know I'm like, oh shoot, because when you go to the gas station, I try to get a receipt and then sometimes I forget, or I get a receipt and put it in the center console and then it gets lost in the shuffle. So, all right. So, however, while tax deductions require you to provide receipts to justify the write-off, there are a handful of deductions you can qualify for if you have other financial documents instead. We'll review those deductions below, but remember to discuss these options with your tax professional or accountant, as they're the ones who can offer advice specific to your unique financial situation. Yes, I am. Like I said, I am no financial expert. I am reading along with you with this. All right, so some office space. Do you primarily work from home? If you have a designated office at home, you might be able to claim the space as a tax deduction. Now, I am familiar with that. Okay, there are 2 ways to claim a home office on your taxes: by calculating and deducting the percentage of home expenses directly related to your home office, or by calculating the square footage of your home office and deducting $5 per square foot. Just one little tidbit from me to you that I found helpful with taxes and trying to keep receipts or keep up with our expenses is a bookkeeping book. And I think I got mine from either Staples or Office Depot. And I want to say it's about $20, roughly, give or take, something like that. Another thing, when you do fill it out, use a pencil. Our tax guy, he was so thankful that I wrote in pencil and not in ink, because for one thing, I can't stand scratch marks, so that's the reason why I put it in pencil, not knowing it was a good thing. The first method is more complicated and requires quite a bit of math, not to mention extensive documentation, including receipts and utility bills. The second method is more straightforward. All you need to know is the size of the space. For instance, having a 300 square foot office would mean you can deduct $1,500 for your taxable income. Business related cell phone bills, yeah. All right, so if you're self-employed and rely on your phone as an essential part of your business, you can write off a certain percentage of your monthly phone bill. However, you'll need to calculate the exact percentage of time you spend using your phone for work rather than personal reasons. While you won't need receipts to do this, you'll need copies of your monthly bill with itemized breakdowns of your phone usage so you can calculate the right percentage. Certain retirement plan contributions. Contributing pre-tax money to an employer-sponsored 401k in 2024 already lowered your taxable income, so you can't itemize your 401k or other pre-tax retirement plan contributions. However, if you contribute money to an IRA account that isn't sponsored by an employer, you can typically deduct that money from your taxes as long as your income is below a certain level. You need to report exactly how much money you contributed to your traditional IRA when filing taxes. Gather bank statements and other financial documents related to your IRA contributions to calculate the exact write-off amount. That's good to know. I did do a video on IRAs, and I will try to put it or pin it in the comment section or in the description box just in case. Self-employment taxes. If you're self-employed, you pay both the employer and employee halves on the Social Security and Medicare taxes, which is a rate of 15.3%. Luckily, half of the amount can be deducted from your taxable income. Plus, if you decide to take the standard deduction rather than itemizing your deductions, you can still deduct the employer portion from your overall taxable income. Your financial advisor can tell you more about taking advantage of this write-off. So this is something that's really good to know because I'm a fish out of water when it comes to taxes. Interest on student loans. If you or your spouse are paying interest on a student loan, or if you took out a student loan for a dependent, you might be able to deduct up to $2,500 worth of interest payments depending on your income level. You don't need receipts to claim this deduction. Instead, you need a copy of any financial statement from your student loan account showing how much interest you've paid so far. That's another good tidbit. Business-related vehicle expenses. If you're self-employed and rely on your vehicle for work, for instance, if you drive for DoorDash or Uber, you can deduct certain expenses related to maintaining and driving the vehicle. Okay. If you saw my video I did on jobs that hire fast for retirees or something like that, this is a good idea because DoorDash or delivery driver was one of the jobs. So that's good to know. If you want to deduct the total amount of money you spent using the car for business reasons this year, you'll need to comb through receipts to get an exact number. Ooh. So it's almost like they're saying with no receipts, but have receipts almost, because like who can really comb through every little inch or hair? You have to be really meticulous with your record keeping or your bookkeeping of whatever you're doing throughout the year with your car or your home space or home office space. So it won't be a headache for you and your tax person come tax time. So I don't know. As an alternative, you can simply multiply the number of miles you drove for work this year by the IRS standard rate, which is 60 cents per mile for the 2024 tax year, and deduct the total amount. Okay. Health insurance premiums for self-employed business owners. As a self-employed individual, you have to cover your own health insurance premiums out of pocket. Fortunately, you can write off your monthly premium payments as a tax deduction. Since your premium stays the same each month, you just need a copy of your health insurance policy rather than any receipts showing exactly what you paid. Okay, that's great, but insurance is so high. Some business trip expenses. If your work frequently requires you to travel away from the state where you typically pay taxes, you can write off some expenses related to these necessary business trips. Bear in mind that you can't write off any expenses related to personal matters like paying for your partner and kids to join you for your trip. However, note that keeping track of your business trip related receipts is the best way to calculate the exact amount you can deduct for business travel. If you don't have those receipts on hand, this could be a tricky deduction to claim. See, it's like they're saying you don't have to have receipts as far as what the article is titled, but it's tricky if you don't have receipts. So my suggestion, like I said, I'm no tax professional. Just try to get you one of those books and get you a manila folder to keep your receipts as best as possible. So when tax time comes, you don't run into any kind of snafu. So certain charitable contributions. You can generally deduct charitable contributions from your taxable income up to a certain points. However, if you donate more than $250 to any charitable organization, you'll need a written statement from the charity stating how much you donated and whether you received anything in return. Yeah, okay, so that's really good to know. But you know what? From what I noticed about charities, and this is such a side note, once you send in a payment or a contribution for the month, they'll send another invoice, if you will, to receive another payment. And then once you start with one, you get a whole bunch of other charities wanting contributions, and you're like, are you selling my information to these other charities? Because I didn't sign up for them, so why am I receiving, donation slips from them? Okay, so here is the bottom line. In the end, itemizing your tax deductions might not save you as much money as simply taking the standard deduction to reduce your overall taxable income. So if you want to learn how to keep more cash in your wallet this tax season, talk to a financial advisor about the specifics of your situation. They can help you decide if the standard deduction or itemized write-offs make the most sense of your bottom line. So, are you all familiar with taxes? Are you all familiar with any of these deductions, these tax deductions? So if any of this is new to you, let me know. If none of this is new to you and you knew about every piece or every tidbit of tax deductions mentioned in this article. So if you are familiar with taxes or a tax professional of some sort, have they missed any kind of tax deductions? And if so, put it in the comment section. Also, if they were wrong about any of the tax deductions, let me know about that as well. Taxes don't have to be scary, especially when you know the hidden deductions that keep more money in your pocket. Every dollar saved is a dollar earned, right? If today's article helped, don't forget to hit the like button, share, and subscribe for more money saving videos like this. And until next time, y'all take it easy. Peace.